What is going on, bull runners? Welcome back to the channel. So if you hold XRP, this is crazy, man. Listen to this. The storm finally let up out here in Miami, Florida, but the storm in this economy is not letting up, and you need to be ready for this because what the Fed is about to do in 19 days is outrageous. So Amanda's taking a little nap. You can't be sleeping on your dreams. You gotta be liking this video, subscribing to the channel, and commenting 777 if you're feeling blessed. So I'm going into the office right now. I have to share some breaking news with you guys of what's happening that's going to drastically impact your portfolio. So this data that I'm going to bring up in this video is wild. Check this out. All right, so here's what you need to know that's going to drastically impact the spending power of your moolah. We're actually giving away a lot of cash. If you guys click the link in the description below, every single week, we're giving away thousands of dollars in financial support to those in need because what's happening right now in this economy is crazy. The spending power of the dollar is obviously going down. And with massive news popping out there about central banks accumulating precious metals, it's going to completely shift the whole economy. So the first piece of news you need to know is the Central Bank of Montenegro has officially agreed to collaborate with Ripple to launch the country's first digital currency in the form of a central banking digital currency or national stablecoin. Now, the Central Bank of Montenegro is not a member of the European Union, but it has adopted the euro without joining the Eurozone, and with well over 100 plus financial institutions. The list just keeps growing every single week that are partnered with Ripple. This adds another notch to its belt. So I know you're wondering right now, and a lot of people have thought about this. Well, if these partnerships are taking place, why isn't XRP breaking out from the 50-cent price range with this news? Shouldn't it just be blasting to the beaches of the moon? When are we going to the beaches of the moon? That's what everyone wants to know. Well, it has to do with this lawsuit. It has to do with market liquidity and what the Fed is about to do in 19 days that will affect everything. So listen to this. A banking law expert, his name's Todd Phillips, he said that using the Howey test to determine what is or isn't an investment contract isn't a good approach for regulators. And he's just beating the dead horse here. He says you also need a contract, post-sale legal obligations, and the right to share profit. If this becomes the test, then crypto assets are most likely commodities, given the Commodities Future Trading Commission jurisdiction rather than the SEC. Now, if this argument is accepted, it would be a major blow to the SEC's authority, not just in terms of regulating the crypto industry, but also in other court cases. And on April 9th, just a few days ago, John Deaton cited Phillips's tweet and noticed that Ripple's defense team had already made this argument and they're waiting for summary judgment from Judge Torres, stating that crypto can't be an investment contract for those who acquire a token on the secondary market for consumptive use with no knowledge of, interest in, or right from whoever previously sold on chain. Now, in addition to this, lawyer Bill Morgan revealed that the SEC's own expert had admitted that the price movements of Bitcoin, specifically Bitcoin and Ethereum, could explain as much as 90% of the fluctuations in XRP's value since mid-2018. Now, this statement is very, very important. It's not entirely true because securities laws, based on securities laws, it supports Ripple's argument that XRP is not a security because if XRP's value is predominantly driven by market forces rather than the actions of Ripple as a company, then it is less likely to be classified as a security. And this is because securities laws are intended to regulate investment contracts where investors are dependent on the actions of a company, which would be Ripple in this case, for their profits. Now, it's very obvious that Ripple's developments aren't really affecting the price of XRP because how many banks, guys, have we seen Ripple partner with over the years that have come out in the news that we've covered on this channel that didn't really do anything to the price of XRP? I mean, this main one is the Montenegro news, and XRP's price hasn't even budged. So if XRP is not an investment contract based on Judge Torres's summary judgment, then it may be classified as a commodity like Bitcoin, which would fall under the jurisdiction of the Commodities Future Trading Commission, which is the CFTC rather than the SEC, just like Bitcoin. And that would have a significant implication for the rest of the cryptocurrency market. As I've stated in previous videos, it would affect the SEC's authority over the entire industry. So if you are betting on crypto and if you're holding any crypto, not investment advice, again, consult your financial advisor who's a multi-millionaire. Don't listen to a word that I say. This is just what helped me become a millionaire before 30. Information like this. When I stayed tuned in and I stay tapped in, it completely transformed my life. And XRP, in my belief, is that cryptocurrency that is honestly the safest play, because if Ripple loses the lawsuit, then every single altcoin is on the chopping block. If they win, then liquidity from the majority of the large caps are going to flow into XRP. Again, I could be wrong there. If you agree with me, give this video a like. If you disagree, then leave your thoughts in the comments below. I do my best to read and get back to every single comment. Now, the judge's summary judgment is important in this case. It's the most important case in history because it could potentially end the case before it goes to trial. A summary judgment is a decision made by a judge, for those of you that are new to what's happening right now, based on the available evidence and legal arguments without a trial. If Judge Torres' summary judgment, right, if she grants Ripple's motion for a summary judgment, it would mean that the case would be dismissed and Ripple would not have to face a trial. Now, it's taking forever for her to give a summary judgment, and most people expected it to happen last month because she wants to make sure she doesn't make the wrong decision, of course. Who would want that weight on their shoulders right now? So this would give crypto in the US regulatory clarity, and it will go down as the most important decision a judge has ever made in the history of the future of finance, or at least top 3 bare minimum. So the decision on whether Ripple versus SEC case goes to trial gets decided by her summary judgment, or it gets appealed to the Supreme Court. Ultimately, that will depend on the judge's ruling on the pending motions and the arguments presented by both the SEC and both Ripple. So if Judge Annalisa Torres grants Ripple's motion to dismiss, the case would be dismissed, and the SEC could appeal to the Second Circuit Court of Appeals. If the judge denies the motion to dismiss, the case would proceed to trial, and a verdict would be reached by a jury or a judge. Now, additionally, if Judge Torres grants summary judgment, it means she would rule in favor of one party without the need for a trial. In this case, the party that wins the summary judgment would be victorious, and the case would not proceed to a trial. However, either party can appeal the decision to a higher court, including the Supreme Court, which ultimately would have the final say and would drag this lawsuit out even further. So for right now, what you need to focus on is until she makes her decision, and this comes out in the news, the price of XRP, if you're holding XRP, will rise or fall based on macro market sentiment, causing liquidity to flow in or out of the market. And what the Fed is about to do in 19 days will determine the market sentiment over the next few months. So the next Federal Open Market Committee, the FOMC meeting, takes place May 2nd through the 3rd, and they are going to discuss monetary policy in the United States. They're going to set the goal for their federal funds rate, which is their interest rate at which depository institutions, banks, lend reserves to each other overnight. Basically, how expensive it is to borrow money. In every single FOMC meeting, they have been increasing the federal funds rate at the fastest pace in history, sending the economy into a tailspin. And for this next meeting, based on CME Group 30-day Fed fund futures prices, I know that's a lot of words in one, sounds complicated. This basically predicts markets' expectations for their next rate hike. Now, what they are predicting is a 71% chance we go between 5 to 5.25%, which would be a 25 or 50 basis point rate hike. Again, generally what happens here is an increase in the Fed's funds rate leads to a decrease in prices of most asset classes, including cryptocurrencies. However, this is because higher interest rates increase the cost of borrowing and slow down economic growth, reducing investor demand on riskier assets like crypto. And like I said, however, there's a main caveat here, because under some conditions, which the increase in Fed's funds rate could lead to an increase in crypto prices, which is happening. For example, if the increase in interest rates, right, is accompanied by high inflation, investors may look to cryptocurrencies as a hedge against inflation. Additionally, if the increase in interest rates is due to a strong economy, investors may view cryptocurrencies as a more attractive investment opportunity relative to traditional assets, leading to increased demand and higher prices. Now, it's important to note that there are so many factors, and these factors aren't what's contributing to it right now, which I'll get into in a little bit, that can influence the price of crypto and the whole entire industry and macro market conditions. And they don't always move in line with traditional economic indicators like inflation and interest rates. So we need to cover multiple points here. And that's why it's good to cover a history about this, because there is tons of other stuff happening all at the same time. And with the recent bank runs taking place, regardless of inflation dropping down to 5%, so with them raising the federal funds rate consecutive meetings in a row, nonstop at the fastest pace in history, well, yes, inflation has been dropping down and it was 5% last month, and rates are still continuing to go up, which normally would cause crypto to fall. Crypto rose. So why is it going against normal economic conditions? Because this is not normal economic conditions, and because people were pulling money out of the banks by the billions and putting that into crypto, and the Fed had to add roughly $300 billion to their balance sheet in just 1 week, going from QT, quantitative tightening, to quantitative easing, and increasing their debt and their deficit. Well, then what did that do? Well, this follows Murphy's Law, right? So people were putting money into crypto because of that panic right there. And Murphy's Law, which is the popular adage originated in the late 1940s, states anything that can go wrong will go wrong. And as easy it is, I know, just to write this guy off as a pessimist. He wasn't the most popular philosophical speaker of the time back then, but this law is a reminder to you right now to be prepared for the unexpected, to always have a contingency plan in place. And so what is that contingency plan? I'll get into that. And while interest rates may generally put downward pressure on asset prices, including cryptocurrencies, certain geopolitical factors have shifted the narrative completely away from, you guessed it, my friend, the US dollar, the bucks. And I know you're probably wondering, why am I holding this much cash? Well, hey, I withdrew some money out of the banks and a little bit of cash to have on hand. You never know. And then also, I'll tell you what I'm accumulating at the end of this video as well, too, that is going to be very, very exciting. And then how we're giving away a lot of cash as well, too, to you guys. And so what are the geopolitical factors that are causing the crash in cash? Well, we have to look at the facts of what's happening right now. For example, central banks accumulated gold at the fastest pace on record in the first 2 months of 2023, which signals that they are preparing for a global monetary reset of the world reserve currency. That's why you've been seeing videos all over YouTube titled, "Get out now," or "The Fed just destroyed the dollar." At least that's what a lot of people are saying, but is that actually true? And what does it all mean? Well, it all starts with the Federal Reserve's dual mandate of price stability on maximum employment, which has been pursuing since the inflationary 1970s, when they took the dollar off the gold standard in 1971, and then they backed the dollar based on petroleum. That's why it's called the petrodollar. So in pursuit of these goals, the Fed has been printing money at an unprecedented rate, which has led to experts predicting dire consequences for the entire economy, specifically the US dollar. So this isn't the first time that the world has seen a major financial crisis caused by loose monetary policy. If you've been alive for a long period of time, I'm not calling you old here, okay? Age is just a matter of the mind and the heart. In 2008, financial crisis, low interest rates, and loose lending standards led to a surge in demand for housing and a subsequent increase in prices. And with the housing bubble burst, many homeowners defaulted on their mortgages, leading to a wave of foreclosures and bank failures. Now, this crisis was so severe that it led to a massive recession, which took years to recover from. But this time around, the stakes are even higher, because in 1944, the Bretton Woods Agreement established the US dollar as the world's reserve currency. And in 2008, there wasn't really that big of a question of, the world reserve currency changing as it is right now, as well as the International Monetary Fund and the World Bank. The agreement was intended to help rebuild the global economy after World War II and promote international economic cooperation. And for many years, the US dollar remained the dominant currency in international trade, investment, and foreign exchange reserves. And if you read Jim Rickards' book, Currency Wars, he talks about the 3 stages, and the last stage is basically, a war with guns or nukes or whatever. And we go through trade wars, and then we go through currency wars. And currency wars is what we've been facing right now with the BRICS nations and them creating their own precious metal-backed currency. However, as the world becomes more popular with multipolar or emerging economies such as the BRICS countries, which is Brazil, Russia, India, China, South Africa, and now Saudi Arabia, gaining in economic power, the dollar's status as the world's reserve currency is being challenged right now more than it's ever been, even in the past, ever since 1940s. So the BRICS countries in particular have been calling for a more diversified global monetary system where their currencies have a more prominent role. And with Saudi Arabia brokering deals with China in their yuan for petroleum and oil, the U.S. may no longer be able to sanction countries who want to deal with oil in the U.S. dollar. So all the fake money and the debt essentially coming flying back to the US, imploding the system, which central banks are preparing for. That's why they're diving headfirst into not only blockchain technology for their central banking digital currencies, but they're accumulating gold. The recent rise of gold purchased by central banks around the world is the largest sign that the dollar's dominance is being challenged, because central banks are buying up gold at the fastest pace in 55 years. And gold has always been a traditional safe haven asset. It's God's money, right? Crypto is people's money, and fiat currency is government money. And people are not trusting the governments. And central banks typically increase their gold reserves as a hedge against inflation or financial instability. So these are the facts. And the writing is on the wall. So whether you think XRP will be the main bridge currency or not, you need to plan to prepare now, regardless of the outcome of this lawsuit, so you can weather the storm of the volatility that is coming. In fact, the shift, it's already been happening. This is not new news. The Chinese renminbi, for example, has been steadily gaining in international usage and acceptance. The renminbi is now the world's fifth most used currency for international payments and trade, according to SWIFT. And China has also been promoting the use of its currency in international trade and investments, as well as establishing swap agreements with other countries to provide yuan as liquidity. So as the US is basically making enemies with, China has been making friends, with our friends and with our enemies as well too, and forming alliances at the different lunch table in school, so to speak. But all is not lost. While the challenges are facing the US dollar and the global economy are real, should you be panicking? Should you be freaking out right now? No. You just need to be prepared. So if this information makes you feel fearful, you got to check in with your emotions and create a plan so you get excited here. This should make you excited, because this presents an opportunity for you if you're willing to take a long-term view and be proactive about your money and know where to put it, as the dollar status as the world's reserve currency is being called into question, and it most likely will shift. It's already happening. Other assets will rise in value too. So what do you need to do? Because if the Fed isn't going to live within their means, if they're not going to default, if they're going to tax the rich more, if you want to become rich and you commented 777 because you're become the first millionaire and they plan on taxing you more, what do you do to legally minimize your taxes, make more money, and prepare yourself when the dollar collapses so you can have more XRP, so you can have more Bitcoin, have more Ethereum, have more Shiba Inu, have more Solana, more Cardano, whatever you want, and have more productive assets? Well, number one, you need to like this video, subscribe to the channel, and share this video all over social media so we can help more people understand what's going on so they can prepare. Because here's what I'm personally doing to prepare. And again, take this or leave it. This is not financial advice. Consult your financial advisor if they are a multimillionaire. This is what I've done and what I'm going to continue to do that helped me become a millionaire before 30. Number one, I'm expanding my options. So I'm not just trapped by one small bank. I bank with multiple big banks in case the Fed lets one of these big banks fail, because you know that their goal may be to chokehold the smaller banks to push money into the bigger banks, because when the Fed prints money, who benefits from this? Yes, the dollar goes down, but the big banks benefit from this because they just buy more bonds, they get more money, and money flows back to them. So if they're choking the little banks to put money into the big banks, what do you think their next plan would be to usher in their CBDCs? Would it be to let one of the big banks fail? Maybe it's Wells Fargo. Maybe, I don't think it'd be Chase. Maybe it's HSBC, whatever it is. Next is the Trojan horse to save people, so to speak, which would be their CBDC program. So we don't know which bank will fail next. So what I'm doing is I'm not keeping more than $250,000 in one bank account. And I don't bank with just one bank either, to protect myself in case one of the big banks fails, that they could potentially, again, this is a hypothetical. I don't think this is going to happen, but if it does happen, you need to be prepared for the worst. That's why I always say we give you the best on this channel so you can prepare for the worst. That's why number two, I'm holding only enough cash in my banks to basically pay my taxes, run my business, basic necessities, build credit, pay expenses, all that sort of stuff. So when I say things like I'm moving into productive assets with anything extra, right, that's just sitting there, if I'm moving into productive assets, I'm keeping enough money in my bank account to live. I'm not just having a $0 balance, guys. So don't jump to conclusions there. There's multiple nuanced points here. So when there's extra income just sitting on top of itself right there, you got to think of money like manure, right? If you pile it up in one place, it stinks and it rots. But if you spread it around, everything grows. So number three, I'm investing into assets that will either produce passive income or hold value in times of inflation or hyperinflation. And that's where crypto, that's where gold, that's where silver, that's where international real estate comes into play as other countries expand and more people want to move overseas, let alone hire employees overseas. But in order for you to do that, you can't just rely on the income from your job to invest, because the rise of artificial intelligence is replacing workers in industries like healthcare, finance, manufacturing, transportation, retail, education. The list goes on and on and on. You are increasing your risk every single day of being laid off. The days that go by where you don't focus on building a business on the side. So that's what I'm also doing. I'm building a side business. Now, the number one side hustle for you to focus on in 2023, in my opinion, that costs little to no money out of pocket, that's completely recession proof, it's completely depression proof, is an information-based business in any niche that you want, because people are more hungry for information than ever before. Remember, information changes situations. When you have different information, it changes the outcome and the output of your life. You know, education is the biggest problem in the world today. The complete overhaul of the education system and the student loan bubble that's about to burst is next. However, you know, most people that are going through formal education, they need to know that formal education will make you a living, but self-education can make you a fortune. And unfortunately, a formal education is not making people a living, because they're having to focus on surviving rather than thriving due to minimum wage staying the same over the past few years and artificial intelligence taking jobs. So if you want to learn the best way to build an information-based business, you can go to bullrunners.com in the description below. You're going to learn how to set up, launch, and scale your own business in less than 24 hours. And you'll also get instant access to our daily newsletter that you can subscribe to with the best information to help you prepare for the worst that's yet to come in this economy. And this information is what helped me become a millionaire before 30. So I know that you are going to love it when you watch the video on the other side. You share this video with a friend as well too, because I know they're going to greatly appreciate you for it as well too, just as you have by watching this information. And when you look at cryptocurrencies and different projects out there, when you have more income on the front end coming in from your information-based business, well then guess what? You don't have to worry about the fluctuations. You don't have to worry about the short-term volatility. See if silver goes up or down, or gold goes up or down, XRP or Bitcoin, or your real estate properties go up or down in the short term. Let's say you're sitting down 10% or 20% if the markets continue to crash. Well, you're still stacking up cash flow on the front end from your information-based business to where you can just keep more accumulating and dollar cost averaging for the dip. So go ahead, click that link right now in the description of this video. And as always, you know what we're doing. We're backing up our truck all the way to the bank. We're grabbing the bags, packing them and stacking them, leaving no bags left behind, because we believe the spending power of the dollar is going down in value. That's the truth based on inflation and what the Federal Reserve is doing. FedNow is not going to fix that. The CBDC system that they're planning on ushering in is not going to fix that. So in order to fix that, you have to take it into your own hands, because together we're all going camping on the beaches of the moon, and Bull Runners Club is going up. So I will see you on the next video. I will see you on bullrunners.com. As always, you know what to do. Stay bullish.